Is X or Twitter turning its back on crypto? Platforms, they're being banned. Lawmakers, they're passing bold new bills. And some of the world's biggest banks, they are making secret moves into blockchain. It feels like the crypto world is either under attack or potentially on the verge of its next massive breakout. Are you ready for the FOMO? Hi everyone, welcome back to another episode of JRNY TV, your go-to channel for keeping you ahead of the curve in crypto, altcoins, and everything finance. Every week, we take some time to break down the biggest stories that matter so you can navigate the space like a pro. Whether you happen to be trading meme coins, or maybe you're in the trenches, or maybe you're even stacking Bitcoin for the long haul. Either way, we are here to help you stay ahead of the herd. Today's episode is packed with seismic moves in the crypto world. X, formerly Twitter, has suddenly slammed the door on platforms like Pump.fun. At the same time, Coinbase is flipping the switch on 24/7 crypto payments for merchants, marking a bold push into the future of finance. But the real shocker, the United States Senate just passed a landmark stablecoin bill, one that could reshape the entire regulatory landscape for years to come. And while eyes were on Washington, Thailand, they dropped a surprise tax exemption for crypto users out of nowhere. Meanwhile, JPMorgan is quietly making moves of its own, filing a mysterious new blockchain payment trademark under the radar. And just when you thought that was it, the Fed drops fresh comments on interest rates that could send markets spinning. Buckle up, this is one episode you do not want to miss. X suspends Pump.fun and other crypto projects. All right, let's get into the madness that kicked off this week. X, formerly Twitter, suddenly suspended the account of Pump.fun, one of the biggest meme coin platforms in crypto right now. Not just that, but its founder, Alan Cohen, was booted as well, along with a bunch of other affiliated crypto creators and bots. We're talking well over 20 accounts gone overnight. No warning, no reason, just a generic violated the rules message that told us absolutely nothing. Naturally, people started freaking out. And yeah, the timing was kind of suspicious. Pump.fun has been making huge waves lately. Tons of meme coins launching daily, serious volumes running through the site, and they are reportedly raising over $70 million for their upcoming token. Add that to a class action lawsuit that's already hanging over them, and suddenly the whole thing starts to look like a coordinated crackdown. Some people think it was about third-party bot activity. Others are pointing the fingers at regulatory pressure behind the scenes. Either way, the move set off a firestorm of speculation. But here's where it gets even more weird. Less than 24 hours later, the accounts were then reinstated. No apology, no real explanation, just boom, back online like nothing even happened. And while that might sound like a happy ending, it actually raises many more questions than answers. Are there platforms being watched now? Is this just the start of a bigger cleanup? Crypto X, or Crypto Twitter, has been buzzing ever since, and if Elon Musk is tightening the screws, meme coin launchpads might need to start watching their backs. Bottom line, this wasn't just a random glitch. It was a reminder that crypto still walks a very fine line between freedom and centralized control. And with Pump.fun exploding in popularity and possibly planning a token drop very soon, it's likely that this won't be the last time we will hear about them. Coinbase goes full payments mode, 24/7, USDC for merchants. Coinbase just dropped something massive, and honestly, nowhere near enough people are talking about it. They've launched Coinbase Payments, a new system that lets online merchants accept USDC payments around the clock. This is a big deal. No banks, no middlemen, no waiting for settlement delays. Just smooth, stablecoin-powered transactions that could flip the script on how businesses interact with crypto. Think of it like PayPal for the blockchain era. And yes, it's live 24/7. This is not some side project either. It's being rolled out with major partners like Shopify, WooCommerce, and Lightspeed, which means real businesses can now take crypto without needing to mess with private keys or exchanges. Merchants, they get USDC directly into their Coinbase wallets, and then they can convert it into fiat instantly if they want. It's clean, fast, and it solves one of the biggest headaches for crypto adoption: friction. Here's where it gets spicy though. Coinbase is targeting millions of e-commerce platforms. That's huge, especially in a world where cross-border payments can still feel like pulling teeth. And on top of that, there are zero fees for the first 5 million in transactions. After that, it's just 1%. 1%, which we all know beats most credit cards and banks. If this scales like we think it should, we're talking about a new global payment layer that rides on USDC, which, let's be real, is becoming crypto's PayPal. It's the moves like this that separate the real infrastructure from the hype. Coinbase is setting up to be more than just an exchange. We're aiming to be the go-to financial engine behind crypto-native commerce. And if stablecoins become the backbone of online payments, Coinbase might end up as the gateway for billions of dollars moving through Web3 daily. Section 4. Senate passes the Genius Act, a federal regulatory win for stablecoins. Here's a big one. The US Senate just passed the Genius Act, a major step forward for stablecoins. With a vote of 68-30, the bill establishes clear rules for stablecoin issuers. 100% liquid reserves, monthly audits, and strong consumer protections are now federal law. Let's break it down. This is the first time the US has endorsed a uniform federal framework for digital dollars. That means stablecoins like USDC and USDT finally have a clear legal foundation across the country. doing, cutting through the previous patchwork of state-level uncertainty. Companies like Circle, issuer of USDC, aren't just hopeful, they are celebrating. After the Senate approved the Genius Act, Circle's stock shot up over 30%, closing near $200, reflecting investor confidence. Strong confidence. Why does this matter? Because stablecoins are ready to explode in real-world use cases, from cross-border payments to e-commerce and DeFi apps around the world. If safe, regulated, and trusted, they could become the plumbing of modern-day finance. And the ripple effect is massive. Stablecoins underpin not just peer-to-peer payments, but yield products, tokenization, and even treasury management. With the Genius Act on track, regulatory clarity hits the market, and then the floodgates begin to open. Thailand just went full bull on crypto. Here's something that barely made US headlines, but could be a massive move globally. Thailand is going all in on crypto. Starting January 2025, capital gains from digital asset trades will be tax-free for the next 5 years, but only if you're trading on licensed exchanges in the country. That's not a small shift. It's a clear message. Build your crypto empire here and keep most of your profits. Thailand's deputy finance minister said that this bold tax exemption is part of a broader plan to grow their digital economy while attracting Web3 talent. The goal? Generate over 1 billion baht in economic activity, which is about $27 million just from this one policy change alone. And let's be real, if it works, that number could be way higher, especially if global trades start flooding into the region. This isn't some one-off move either. Thailand's regulators have already started cracking down on sketchy offshore exchanges while making life easier for registered ones. It's a clean house and open the door strategy, and it's positioning Thailand as a very serious contender against places like Singapore and Dubai. And if they play their cards right, this could become a crypto hotspot for years to come. Bottom line, Thailand is pulling out the welcome mat while other countries are dragging their feet. If you're in crypto for the long haul, be sure to keep an eye on regions like this. They're quietly laying the foundation for the next wave of crypto adoption. The Fed hits pause, but what comes next could shake markets. The Federal Reserve just decided that interest rates, they will remain unchanged. And on the surface, that sounds like good news, right? No more hikes for now. But here's the catch. Fed Chair Jerome Powell made it clear that they're not ready to cut right now. His exact words, it's going to take longer than we expected for the Fed to reach the confidence level that they would need on inflation. That's code for don't get too comfortable right now. And why does this matter for crypto? Because the markets are addicted to rate cuts. Every time the Fed even hints at easing up, Bitcoin and other risk assets, they start pumping away. And when they stall out like this, volatility spikes. And that's exactly what we just saw. Following the Fed's statement, crypto markets dipped while traditional equities barely held on. Here's what traders are watching now. Will the Fed finally move by September? That's what the futures markets are pricing in right now. But Powell seems hesitant, especially with politics pressuring him from all sides. Specifically, Trump, who's been slamming the Fed hard, even saying he may force Powell out. Yeah, it's getting that serious. What happened to a system of checks and balances? So for crypto investors, this isn't the time to sit back. This particular limbo zone between inflation fears and political chaos is the kind of pressure cooker that sets the stage for massive moves, especially for Bitcoin, Ethereum, as well as the altcoin market, once rate cuts finally arrive. JPMorgan files JPMD trademark. Corporate crypto game changer? JPMorgan just filed for a trademark called JPMD, covering crypto and blockchain services, trading, custody, payments, transfers, you name it. No official product just yet, but the move says one thing loud and clear. The bank is quietly but surely getting into much deeper crypto territory. Here's exactly why this is huge. JPMorgan controls over $3 trillion with a T in assets under management, and they're no rookies with digital upgrades. They already launched their own stablecoin, known as JPMC coin, for interbank transfers. This new filing hints at expanding those tools for broader use, possibly even for retail or business clients. So imagine this, getting offered digital asset integration and or wallet services that would be linked directly to your checking account. That is next level. Now you pair that with everything else we've been talking about, from the Genius stablecoin bill, USDC merchant payments, global tax breaks, and X tightening its stance on meme coins, and you've got yourself a pattern that's brewing. The infrastructure is finally falling into place. Regulation, payments, tax-friendly jurisdictions, and big institutional backing. It's like the universe is aligning for a crypto breakout. And banks like JPMorgan are making sure that they do not miss this ride. If JPMorgan's next stop is a client-facing crypto service, whether tokenized assets, wallets, or trading, whatever have you, it could in fact bring hundreds of billions of dollars into this space. So yeah, mark this down. From shadows to headline moves, JPMD could be the next major wave of institutional adoption. Institutions are quietly going all in. Are you ready? So let's recap. In just 1 week, we had Coinbase drop a new payments solution, the United States Senate move forward with stablecoin regulation, X, formerly Twitter, suspend and then reinstate major crypto players like Pump.fun and JPMorgan file a trademark that screams crypto expansion. Meanwhile, Ethereum bulls are back. Doge is creeping into headlines and the Fed is sticking to the data on rates, setting the stage for something big. Whether you're deep in DeFi, flipping those meme coins, or maybe you're just stacking some blue chips, now is the time to pay attention. The signs of institutional adoption, they're everywhere. Laws are shifting, companies, they're building, and governments, they're trying to catch up. These aren't random headlines. They are building blocks for the next wave. So please, make sure to hit that like button, subscribe, and do let us know in the comments which of these stories caught your eye the most. And if you want to get an edge into your next run, you want to check out Trade Hero, where we get into real-time calls, strategies, and alpha every day of the week. This is JRNY TV. As always, stay sharp, stay early, and stay in the game. We will catch you in the next one.